The theme of the event, as Manish said, कि आपको सच्चाइयों से रूबरू कराएं हम, आपको इस इन्वेस्टिंग लैंडस्केप से वाकिफ़ करवाएं, ताकि आप इस गिवन लैंडस्केप की रियलिटीज़ को अप्रिशिएट कर पाएं और R&R को आज बेहतर समझ पाएं. We are starting with the overall picture and the whole scheme of things. Before I get to that picture, there is one gentleman who I really very admire. His name is Sir John Templeton, if you've heard of him. He is a famous American-born British investor. He is a philanthropist. And he is a very good fund manager, by the way, if you've heard of Templeton funds. And he says, the 4 most dangerous words are, and I repeat, he says, the 4 most dangerous words are, this time it's different. हर बार इन्वेस्टर इन्वेस्ट करने की कोशिश करता है, बार-बार अपने आप को यही मनाता है कि this time it is different. The question now needs to be asked, keeping India at the helm of this given perspective, and asking, is this time really different for this country? Is this time really reflecting what the IIP data says, the industrial production data says? Is this time really different from a consumer consumption story background? What are those scenarios hinting to us? वहाँ से ऐसी क्या चीज़ें जो हम pick up कर सकते हैं? Honestly speaking, I am not the expert, but we are very fortunate. We've introduced this gentleman to you today morning. We are very fortunate to have an expert in-house who will share the perspectives of what it means to you, to me, as the citizens of this country, as the investors of this country, as the people who are wanting to see what 2025 means to all of us. Ladies and gentlemen, please put your hands together for the expert, Mr. Jeetendra Nair.
Good morning, everyone. My name is Jeetendra Nair, and it's a pleasure to be with all of you this morning. I'm not too sure about the title that has been conferred on me as an expert, but what we have done is, our team, largely more than me, we have worked substantially to put together a lot of data points, which helps us to conclude this particular statement that we are speaking about, which is revival and rising. For us to come to this particular words has taken enough research of data, different indexes, the way we look at the marketplace, the overall growth of the ecosystem, all that put together. And finally, we would like to believe that the presentation that has been made over the next 30 minutes is leading up to what are the macro level stories that we look at as a growing India. You know, when all of us as investors, when we look at India, the Indian economy, overall concept of wealth creation, one of the primary things that is being spoken in most boardrooms is what is the story of 2025? Because the concept of long term is fortunately gaining traction. A lot of us believe in the fact that it takes time to build good things, including R&R has been, you know, we have taken enough time, effort, money, and intelligence to put together what is available today. Likewise, the concept of wealth creation and timeliness of it is something which everyone is now recognizing. So in most boardrooms of good fund houses, good investors, you will hear this whole concept of what lies in us for 2025. So we, and largely our team, we have worked together to put certain data points which I believe will give us a reflection of how do we see the story spanning out. Now, I'm mindful of the fact that we are talking at a time when perhaps the markets are a little sluggish. Maybe overall the moods are a little down, especially ones who are going for vacation next week will be a little more pinching, you know, with dollars being the way it is, all of this being true. Having said that, as my colleague Manish spoke a while back, we have been philosophers of the long-term story. So when we look at any attribute, we don't look at the event, we look at the larger canvas, so to speak. And when we see that, and when we put all the data together, what we are seeing is that there is a very clear indication of a winning leap coming in the way. This is a marathon, this is not a sprint. And when we look at the start that we have taken, I'm talking about the Indian markets, and when you look at all the other demographics that we'll be presenting now, you will perhaps agree with us the fact that the long-term story of India looks very bright. And that helps us to conclude from our perspective, and our belief system is that the Indian story is something where not only Indians, but a lot of global participation is going to enhance in the times to come. So, we are putting up data. This is taken up from some of the best research reports. In that context, this is something which is of good academic as well as wealth creation, So, what do we see on the GDP? Okay, without keeping it too technical, if you look at last year, we obviously had, most of us as businessmen, had various challenges, with prominently two of them being the demonetization and the GST and the alignment and the back-end process and the mindset change, all of that put together. So if you look at our growth, it has been declared as 6.7%. But when you look a little deeper into it, what you would see is that the last quarter performed at 7.7, which was an indication of better days to come. What is the forward path that everyone is talking about? If you look at it, the growth is pegged at 7.4%. That is what everyone is looking at for India this year, of which, again, if you look at the H1, the first half of the year and the second part of the year, the first half is supposed to be performing better than the second half, and largely because of an impending election, and there's going to be a little bit of slug because of that, all that put together. So we are anticipating the economy to be at about 7.5 to 7.6% in the first half, and at about 7.3 to 7.4 in the second half, averaging out to about 7.4%. Now, what are the key drivers of this? A large part of it, which I believe is a great news for all of us, is that if you look at the budget very closely, there's been a lot of allocation for public capex. The capital expenditure on some of these major projects, if you look at railways, roughly about 1,500 billion, look at roads, talking nearly 1,200 plus, and if you again look at housing, look at the shift in housing. As much as we know that residential infrastructure is not something that all of us are investing in today, but the fact is the shift of momentum, if you take a very non-metro centric approach, you will see affordable housing is a growing segment. Again, there's a lot of deployment there. Civil aviation, power, all of this put together, close to 4,000 billion is being infused. And the good thing is this is money being infused by the government. So the public capex that you see here is something which is going to drive the overall ecosystem. Having said that, I think all of us as investors should be mindful about the fact that the state capital expenditure perhaps may have certain challenges in terms of deployment. And that could be because of political compulsions, where we anticipate some level of farmer suicide, those loan adjustments, all of that put together. You will see some level of compulsions, political compulsions on fiscal consolidation, which may essentially mean that the state capital expenditure may be moving slower than what is anticipated. Likewise, if you look at the traction over the last 7 or 10 years, you would generally see that the private capital expenditure tails the public capex. And in that context, you will see once the government layouts start happening, there would also be a private capital expenditure getting deployed. Having said all of that, we anticipate this not to be a very instant thing as compared to what we see the public capex to be more instant, and deployments have been already planned and happening as we speak. Once again, our Sanjeev ji just mentioned about the consumption story. Sorry, sir. Yeah. We can share it on request. We'd be happy to do that. I understand. Yeah. Yeah.
There is a lot of debate or discussion or articles being written. Ordinary people like us are not very clear. So if the number is shown, it is different. If the base itself is changed, then that doesn't carry a meaning. So maybe you can throw some light on this.
Yeah, we can. Would you mind if I take it at the end of it?
Sure. Yeah. Thank you.
Sure. So the second part that we're talking about, key drivers. The first being what we spoke about, the public and the private spend. The second being the consumption story. For the first time that we see that, and I'm sure all of you all, I come from a different place, I'm settled in Bombay, And you would see a lot, when I go back to my native, I see it's no more a rural what it used to be once upon a time. So there is a trend of urbanization, there is a change in lifestyle, there is a change in the mindset of people, all of that put together. When you look at the urban discretionary consumption, that is increasing by the day. All of us spend more money than we were spending, say, last year. And likewise, when you go to the rural markets, you will again see the same pattern of spend enhancing there, except that the scale may be different. You may spend 100, somebody may spend 30. But the fact is that we are moving from 80 to 100, and they're probably moving from 10 to 30. So we are anticipating a coexistence of urban and rural consumption tangoing together after perhaps for the first time in the economic structure of our country. The rural stress also has bottomed out. We are basically, we work in a economic structure where the government takes all policy decisions. But if you look at, and we do amongst the various businesses that we do, one of it is into rural India. And I must say this with a lot of pride, that there is a lot of touch points on rural India today. It could be some of the best consumer brands trying to make an entry into rural India. It could also be a lot of government schemes which are actually touching the poor and the needy. And by rural, we are also talking about the rural rich, and we are also talking about the rural poor. And all this is coming together as a overall story for us. We expect, the way it has been put up is the brighter segments, which are largely more instant. Then you have the medium segment, which are in the times to come, and obviously the one which are good. But all of them are good as we speak here. So we have auto sales, steel, capital production, petrol and diesel consumption, cement production. All of this seems to be because of the large, focus on infrastructure. We expect all of this to be gaining enough traction, all stocks related to this in good traction. Likewise, we expect air passenger traffic, air cargo, rail, freight to be decent, sectors that will benefit out of this. And power supply, retail credit, services, all of this is also expected to be growing in the times to come. So having said that, there were always in any market, as we said, there is nothing like timing the market. There could always be swing factors. Somebody spoke about, the shift of the base data. All of this is being the real fact, and the fact that we live in that world where all these things happen. So oil prices. So we are also staring at certain uncertainty on these attributes, and we don't know which way is this heading because there's no scientific formula to identify that. Having said that, oil prices is one component. The rebound in private capex with, there's a lot of plans that the government has on recapitalization of the public sector banks. Okay, it's there, yet it's not there. Okay, and we are all confident that's going to happen. So the timing of that is also going to be crucial. Adherence to the overall fiscal deficit, as has been mentioned in the budget. So all of these factors are also swing factors, I think, that we should be mindful about. Can we eliminate this? The answer is no. Can we be mindful of this? Yes, we can be. And which way can it swing? There's no scientific formula to that swing. Having said that, we are anticipating this to be more positive than on the other side. So to conclude what I said, the overall near-term headwinds that we anticipate, yes, there are certain gaps. Like my colleague Manish said, there are certain challenges. India is on a journey of being on the upswing. It's not going to be very easy for a magnitude of our country. But is this worrisome? No, it is not. It is something which I believe that with the overall intellectual capital that our country possesses and the political wit that is on display, this is something that we will capture in the time to come. What we believe, the research and ranking belief system is that when you have a stable policy which is backed by strong reforms and which is added up with very favorable structural drivers, okay, when you have this, all of this will generally equalize into a momentum of growth. We are expecting a good vicious cycle of growth coming in because of these. What are those elements and what are those structural drivers? We would just like to glance one slide on that. The first being GST. I mean, we ourselves have been very pained with the overall implementation process of GST, but every time when we did that, every time when we have gone through that cumbersome process, we have realized one thing, that it's happening for the better. And especially for people who have been doing business the most rightful way, it's a godsend opportunity. And this is going to add substantially to our our growth. It's one of the key structural drivers that research and ranking believes will enhance the growth prospects of our country. Likewise, the insolvency and the bankruptcy law, that's also on the NWheel. RERA. There was a wonderful article on RERA just 2 days back on NDTV. Was it yesterday or was it day before? I don't recollect, but one of these 2 days. Wonderful news story covered on RERA. The success, the challenges, the way forward. Brilliant. You can see it on YouTube. I mean, it's something that you all should go through. Likewise, deregulation of fuel prices. This is going to be a very key, aspect. The jargon JAM, Jan Dhan, Aadhaar, and mobile. Now, whilst this has been a little bit irritating, if I may say so, because you have so many policies, procedures, but these are like those one-time polio injections that we take, and if you look at overall, my exposure to rural markets tell me that for the first time I see the money being spent from the center actually reaching the person that is intended to, because for various reasons, all these aspects, and when you actually see the the real implementation down on the ground, you feel happy for the fact that you've contributed to implementation of these, though under compulsion. So we see that as one. Digitization. You take your own drivers, you take your own, your cousins who stay in rural India, as the case is, I mean, whoever they could be, you could see that digitization is playing a key role in, to me, and I say this, it's my own theory, there is a change in the mindset in the way a person thinks, because you're connected globally, you're exposed to a lot of content, you are being marketed by a lot of people. All of this, when you look at it, digitization is playing a key role in changing the thinking process of a country, desh ki soch, if I may say so. All of this is being, shaped up because of a digitization process. So when we look at it, it is not purely a project, Digital India. It is perhaps a state of mind. It's a state of literacy. And the fact that the moment you get exposed to internet, somewhere it also triggers your educational instincts to get a little more learned, a little more educated, etc. So that's on the digital side of it. And likewise, ease of doing business in India. We have gone up 30 steps. I don't know how many of you all visited the Make in India, which was in BKC, MMRDA grounds. It was, in my opinion, one of those shows that we as Indian citizens should have been very, very proud of. You should have seen the way they showed what Mumbai will be in 2025. Remember, the most best spot will be Haji Ali, which I learned that day. When you go to Haji Ali, that's where there are going to be 7 cross sections of different roads coming together. The whole layout, perhaps a lot of things have not been communicated as effectively as it should have been, but for the ones who went there could understand how the underground metro tunnels are going to function, how the sea tunnels are going to function, how the roads are going to get connected, etc. So when you look at the ease of doing business, also there was a complete presentation on how India got that rating and what are the steps that they followed to reach there, which I believe, and I truly believe that was a commendable achievement on the part of our country. So how do we sum it up? Our summation at Research and Ranking is, we believe structural reforms aren't easy. Is GST easy? No. It's one of the biggest projects, in my opinion, taken up in the world. It's not easy, okay? But once we cross that hump, we know that the benefits which are there on the other side is going to be very, very good for the country. So, and when you look back into a lot of economic literature, you will see that generally economic reforms have always been backed by some very strong, economic periods. Reforming countries experience a growth acceleration. You look back in history, you will see every company which is, including our country in 1991, if you look at where did the maximum people make money. If you go back, from post-reforms, there were so many new millennials that were created in our own country. And that's been an example globally. And we don't see that very different from what it will be. We truly believe at Research and Ranking that the next 10 years in India will see a lot of new millennials in creation. And reforms in banking. In our humble view, I think very few countries would have had the guts to do what India did. To take the banking system head on, to get into provisions of that magnitude, to shake up your markets if that is what it meant to, required a lot of guts and gumption. And I think we as a country have demonstrated substantial muscle to have executed that plan. We have gone through that pain. We all have perhaps eroded a little bit on those talks. But if you look at what's shaping up today in the banking reforms, is going to be very, very beneficial for us in the times to come. And that's why every country which is looking at FDI and is capable of investing in other country would be foolish to not have India on their map. So they will look at India as a very, very attractive destination. Sorry for the small fonts. What we have done is, if I can just reach out to the ones on the rear end, we have put in near term, what are the high probability sectors. We have put in the medium term, again on high probability, and long term. The definition being 2 to 3 years, 3 to 5 years, 5 years and beyond. These are all reforms under, the reforms that is going to help the GDP to grow further. So what are the current ones which will help us over the next, in the near term? First one being GST. So GST is, we rank it as the best. Jandhan, gold monetization, FDI and insurance, which in the outside market, globally, people speak about this very, very highly, more than GST because it does not imply them. The fuel subsidy, deregulation, RERA. All this in our view are near-term benefits, and this will help the overall growth of the GDP to the extent of 1 to 2%. That's what has been put up here. The potential swing can be 1 to 2%, minimum being 1, and in the range of 1 to 2. These reforms will help us. The next one, which will show us a way forward, those are seeds that we have planted today, but will help us as we go forward, would be Make in India, Digital India, direct tax reforms, Indradhanush, the EPF money, housing for all, which is again a big thing. I believe we may have to add the health for all, whatever it's called as the new scheme, the ease of doing business. All of this would come in the medium term. And in the long-term view, we see some of them, Skill India, we also work in that substantially. Skill India, defense, tourism, smart cities, railways, roads. You look at all the banks, they have a smart city division now. Where are they expecting the revenues to trickle in? Probably after 2 years. But they have a division, they have people, who are setting it up. Likewise, if you look at every government department, or most government departments, if not every, they have something to do with skills. So all these 5 years long-term view, we expect should be adding up roughly about 2-ish to the GDP. That's over a period of 5 years. So we have, in that sense, tried to rate it in terms of short-term, medium-term, and long-term. Which are the sectors to benefit? Financial services, insurance, consumer staples, consumer discretionary spends, oil marketing companies, building materials. These are some of them which will have immediate. High probability is engineering, defense, hospitality, railways, roads, wellness and healthcare. Low probability in that sense is power generation, power equipment, manufacturers, power company, renewable energy, so on and so forth. We'll send this presentation to you for detailing. So, if I go back, these are the government reforms, which we spoke about how is it going to contribute overall to the Indian ecosystem as we speak. Now, if you look at certain structural drivers, which necessarily does not have an interference from the government, it's not a government-created structure. The first one being, and we all have heard this, whenever you speak about India and its overall long-term story, you hear about demographic dividend as the first point that everyone is speaking about. This may look a little jargonic, but if you go a little deeper into it, if you dwell a little deeper into it, what they are speaking about is lethal. I remember I was in a session about 4 or 5 years back whenever Mr. Sibal was the HRD minister. And he spoke about a very interesting phrase which registered in my mind. And he said that India can potentially be a Pakistan. Okay, so everyone was a little intrigued to understand ye kya bol rahe hain. So what he said is the amount of people who are going to come up, okay, who will be completing the education and coming up into the job market, if these people are not provided with adequate skills and consequent jobs, we may have a potential problem that some of our neighboring countries are having today. And that was the foundation. He was heading the HRD minister to say that how the whole Skill India, National Skill Council and all that was built up. The point I'm trying to say is, in the demographic dividend, we are talking about India having 18% of the world population. 18% of the world population. That's equivalent to saying that we have 18% of human market share. And this, it can be a lethal force. As he said, if they can be put up in the right purpose, this 18% can be defining the world. So that is a huge strength. We are the second largest English-speaking population in the world. And by the way, with English being so fancy and so sexy and so, so regarded upmarket, this is going to be quadrupling in the next 1 decade. So we are talking about this 10% moving up to about by 4 times. The literacy rate as we speak today is at 80%, which was 65% in 2001. Mind you, like we spoke about some of those long-term reforms, educational reforms by the sheer necessity of infrastructure, once seeded, takes a good time to implement. Now you will see that it may have taken us to inch up till from 2001 to here, but the next part will be coming up much sooner because of the fact that the infrastructure was then created, those monetization of those infrastructures are being done today, and consequently you see a lot of people passing out and adding up to the educational data points. The unemployment rate, currently, if you look at it, the current unemployment rate, everyone is speaking about there are no jobs, etc. We are also in businesses which are related to jobs. And I can tell you with a reasonable degree of confidence that perhaps what is being projected is not necessarily true. It may be true for some segments. I'm sure all of you are senior people in your own companies. Look at the fact that when you need people, are they available? One can potentially discuss about the fact that there could be a gap in the skill set that is required to what is available in the market. But to say that people are not available for, or jobs are not available for people, in that context may not be completely true. It may be more sector specific. The second, so that being the demographic dividend, population, literacy, English speaking, unemployment, all of that. Now when you look at what's happening on the other side in India, for the first time you will see the middle income, the middle class, and the what we call as the urban class or the elite class, they both would be spending. Because after a long time in India, the middle class has got into dispensation of money. And that is largely happening because of middle class is now going to constitute 59% of the overall consumption story. So out of every 100 rupees being spent, 59% is going to be coming in from the middle class, which was not the case earlier in the India that you knew about. I remember, I'm from Kerala. When we used to go to Kerala, we used to carry those talcum powder, those cream, all those other attributes, some basic medicines. Aaj jao to sab wahan pe already laga hua hai. There's no reason why they would look at you for any of those aspects. So that rural, urban, that middle class, urban class, all that is changing. The second important point is that it's not restricted anymore to a Bombay. If you just drive down 2.5 hours down to Nasik, the lifestyle that people have there is not very different from the lifestyle that we have in Bombay. As a matter of fact, हम लोग कभी-कभी थक जाते हैं. So to that extent, we may even want to walk into a mall with a 3/4. That they may not do because they may be a little more stylish, so to speak. So the 2-tier and the 3-tier cities, the advent of that, the growth of those cities, like one of the senior business leader used to call it as neo-metros. So all these neo-metros will constitute and contribute towards the growth of our country. If India continues on its current growth path, it is expected that the country will become the 5th largest consumer by 2025 with the current growth rate. हमको और कुछ नहीं करना, we have to just maintain what we are doing. Because the sheer consumption story in our country is increasing by the day, by the month, by the year. Manish made this point about the millennials. The generation Z that is on the way, the generation Y which is already there. Okay, the beauty is the sustenance of this market. A lot of time you can have someone who could be a generation which will pass by and the next one is not coming in. If you look at India's growth story is dependent on the millennials and the generation Z, which basically means these markets are going to be sustainable for the years to come. And therein lies opportunity for businesses to create scalable and sustainable revenue models. The third very interesting structural driver for our economy is the household savings. I think somebody mentioned that, I don't remember, it was Sanjeev or was it Manish. Okay, once upon a time, I've come from a humble background myself. Okay, my mother used to save a little bit of money. And even if we had no money at the end of the month, you could always go to the home bank, which is our mother, and she will have it somewhere kept, inside, and she will remove it for us. Okay? But the concept was physical custody of the money. At best, the concept was depositing it into a bank. Okay? And the general perception that we have all been brought up with, equity is risky, gambling, satta. that kind of a governing thought that we have been bred with, if at all we have been that educated, because of which we never looked at participation into equity markets out of household savings. वो दिन चले गए अभी. If you look at the last point, I'm just skipping now for this here, the share of shares and debentures, this point, the share of shares and debentures in the gross financial savings tripled in 16-17, which basically means if you were saving 1,000 rupees earlier, now 300 you're putting into, earlier it was 100, now you're putting in 300 into the stock market, either in the form of shares or in the form of debentures. To me, this is not a data point which is indicative of kitna paisa aa raha hai. It is about the shift in the mindset. When you start looking at a particular asset class, when you start looking at something which you potentially believe in, people invest money only on either belief or hope. Ideally, if you have a combination of both, you could have a winning ticket. But invariably, one of the two will score for you to make an investment decision. And truly speaking, if there's a collective decision and collective decision-making capability within a house, where generally, for example, in my house, if my mother would have said in those days, saying that, हाँ चलो equities में पैसा डालते हैं, which basically means it's a collective consensus. To get that vote is the most difficult vote. But today that is changing. It is also changing because of education levels enhancing. It is also changing because media, so much of reading, and the other asset classes not delivering. So none of us are now investing in real estate. There should be a reason for it, isn't it? So those are the finalization of household savings. We spoke about the roar of the digital tiger. Okay, it's a very, very important point for us. If you look at the internet penetration rose from 80% in 2010 to 25% in 2016. Once again, like education, telecom is an infrastructure heavy reform. So when you plant a pipe today, you're going to get the connection substantially after some time. And that's why you will see the next data point that it is expected to grow to 55% by 2025, which may not be very difficult because of the fact that the basic structure is now ready. It'll keep adding, but the basic structure, the thought, everything is ready. So we are expecting about 55% of India to be on digital thing by 2025. The total value of e-tail, the total value of the trade value of e-tail to reach 130 billion to 150 billion, or 8 to 10% of the total sales by 2025. So e-tail, that's why you see a lot of time we sit and say, yaar, itna loss bana rahe, yaar, in log itna valuation kaise aa raha hai? It's a question that most of us keep asking. And you will see that markets always work on the basis of future. It is never on the basis of present. So when you look at the future indexes, you will see that digital, we are being called as a digital tiger in the, in the IT lingo, we are being now called as a digital tiger. The other very key attribute on that one is 32 years. Young India, smart India, vibrant India. Okay, 32 years, all of us working. Bachcha bhi nahi hai, booda bhi nahi hai. It is that average age of 32 years which is a peak time for you to earn. So all these people contributing into the growth of India, and when you compare that to a China is at 43, a US is at 39, and mind you, in averaging, all of us age. So in that context, we are standing at a major advantage of nearly a decade as compared to US. Urbanization. If you look at rural, urban, it's projected to be 68-32. Okay, with rural at 68% and urban at 32%, and 40% of India's population is going to be living in urban areas. Look at the amount of cities being created, amount of flyovers, बहुत कुछ काम चल रहा है. All the smart cities project, if you go deeper into it, you will understand that all of it has a lot of meaning. Perhaps we have gone wrong in some of those implementations, but I'm sure with the right intent and with a little bit of experience of failures, we will transform that into successful stories in the times to come. Urbanization. The last point being integration with the world economy. What's happening with the advent of digital and once upon a time going abroad was considered to be very glamorous. Okay, today going abroad is like, चलो मैं यहाँ BT तक जाके आता हूँ, or for that matter दिल्ली तक जाके आता हूँ. Going to Dubai makes no difference. Even if you look at once upon a time, it needed a lot of money to travel abroad. But today that's not the scenario. Okay, so there is an integration of geographical boundaries. Okay, not politically, but economically. Okay, there's an integration of geographical boundaries. Doing trade has become easier. Today, if you look at, in the wealth management business, there's so many people from abroad who come and invest in, in the core wealth management. So it's become much easier. It's no more those 20 forms that you have to fill up. You do one thing, and by the time you say Jack Robinson, you're done. So, so the ease of doing business, the ease of getting in money, the ease of taking out money, all of it constitutes substantially to our thought. So, how does the new Indian consumption story look like? The larger point that I want to say, this slide, I don't know how legible is it from the rear side, but what it indicates is the elite class coexistence with the middle class. And when you have the two major classes coming together to spend in an economy, the force can be very, very formidable. The force can be very, very lethal. Okay? So the gist of this slide is to say that how, if our overall expenditure, and if we maintain a growth of about 12% in our own businesses, आप समझो अपना अपना appraisal 12% हो गया, so to speak. Okay? Then you will see that we will, at the anticipated global rate of about 5%, this will make us a 5 trillion economy by 2025. And for that, it is important that these two classes continue to spend, which was not the case. India's consumption story has been always dependent on the elite class. Now, elite class continues to be there. A lot of people from the middle class is going into the elite class, but there's also a larger amount of people who are going from the lower class to the middle class. And that, in that sense, is going to drive us in the future. So, with all these data points, what we sum up internally at Research and Ranking is to say that we have a huge business case to believe, and we have a huge business case to depend to say that we are going to be a US 5 trillion business or an economy by 2025. And that will obviously happen with structural initiatives that we spoke about, fiscal responsibility, political stability. All those ifs and buts and assumptions have to be in place. They are in place. But if you take a positive view about it, if all these things have to happen, or aisa koi anokha bhi cheez nahi hai that it can't happen. These are things in the natural course, notwithstanding the political dispensation, okay, of who comes in power, will have to be done by the sheer knowledge of the country and the collective wisdom that Indians possess today, and contribution from every one of us, who's also in that sense contributing to the growth of the country. When we put all this together, we see a very good business case for us to be a 5 trillion economy by 2025. So this is further ratified by the fact that when you look at some of those reports, we all can take these reports with a pinch of salt, a fist of salt, 2 hands of salt, as the case may be. But the fact is, when we get into certain, we just can't be sitting tight by saying it can't happen. We have to take those plunges on the basis of certain calculated moves that we feel could be a natural corollary to the overall business story of the country. And that's where we feel, when you look at some of those Boston reports and all that, you will see that as per IMF, India is projected to be the fastest growing economy in the real GDP terms at 7.6% through 2015 to 2025. Likewise, the domestic savings allocation to equities, the point that we spoke about a while back, okay, that is supposed to multiply substantially. If you look at the McKinsey report, we are talking about India to have 69 metro cities by 2025. बहुत सारे इसका तो काम ही चालू है अभी. A lot of cities are becoming metro cities. A lot of places where, smart city plans and everything has been, there are, I don't know if you know, there are awards for the smartest city now. So every year they announce which city has been the smartest city, so to speak. The market cap is supposed to touch about 4 trillion. Likewise, we expect India to supply 25% of the global working population. So the trend in India, especially from the place that I come from, in Kerala, when you generally walk on the street, you will find very little men and too many women, because most of them are in the Middle East working and sending forex back home. And this is now becoming, if you look at Orissa today, the same trend has started there. Rarely will you find, people who are wanting to come within. And so the exodus of human supply of especially skilled laborers, especially skilled minds, which will go beyond the realm of IT as it is today. And that's the new India that you will see. Today, there's a prominent blog that we write on, alternative careers. Once upon a time, when we were growing up, if you had to be a good student, you had to be a doctor or an engineer. CSVS bolte to hamare yahan pe to koi sunta bhi nahi tha, It was like that. So, but today those alternative careers are so many. There are so many alternative careers that the supply of human capital for some of those very, very niche tech skills, niche medical skills, niche laborious skills, all would be expecting from India. And by the way, Africa has a charter. Our friend does a lot of business in Africa, So Africa has a charter to be the next best after India in terms of supply of manpower all over the world. Because here we have a coexistence of multiple structural reforms at place. There, that's not the case. So they are purely going on the human side. In our case, we are expecting that to be a major winner. And the size of banking assets is supposed to be USD 30 trillion by 2025. One of the last points that I want to make here is the manufacturing sector. The manufacturing sector is, at the moment in India, if you look at the traditional economy of India, once upon a time, as I was born, it was all agriculture, agriculture, agriculture. Then started the small industrial revolution, but वो शुरू हुआ वैसे ही खत्म हो गया. और खत्म, और for that matter, it could not grow at the same rate. Because services came in like a tsunami, and it just transformed the overall, the overall structure, economic structure of our country. And because of which, with all these policies coming in place, you would see a coexistence of agricultural economy, manufacturing or industrial economy, and the services economy. And when all of this will start firing at different cylinders, that's when you will have that BMW of this year. 1985 ke jagah pe, we can have a 2018 model. So this KPMG study indicates that our manufacturing sector is going to grow substantially. Those data points are put up there. 25 to 30% constitution into our overall growth by 2025. And if you correlate that to a previous slide, we have spoken about Make in India as one of those long-term structural reform that the country is deploying. So a peep into the future, when we say that we can be, if we grow at 10%, the overall growth can be at 10%. So we just put up a different data. If we grow at 7%, 5 trillion will be in 2029. 4 साल पीछे. अब उससे तो और ऊपर कुछ नहीं होगा. Yes.
So the blue square that you have to the left, can you just touch upon this 5 trillion real term and 7 trillion nominal term?
Yeah.
If you can just touch upon that, if you can just explain, that will be.
I think me and Manish were discussing this yesterday evening.
Thanks.
Yeah. So what the formula that is followed for GDP is you have the GVA, the gross value added, okay, of which we add up, there's something called as the net of subsidies and, what's the term for that? Net of subsidies and taxes, indirect taxes. So when you put the two together, what happens is when we calculate the real terms, those values are adjusted. And when you actually take it in a nominal term, they are non-adjusted. So it's mathematical. The expert would be Mayuri. But nevertheless, I can take it. We have that formula on our screen. I can just share it with you. Yeah. So we were talking about a journey from 2025 to, even if you take on the current index, we are talking about 2029. So the question is, are we going to be what we are anticipating by 2025 or by 2029? If all of us put our guns together, all of us put our efforts together, we believe that this can be a 2025 story. And that is where, if you look at the research and ranking, overall approach is always long term. It is not, so some of the stocks have tanked by 30%. Frankly, we don't look at the value of that stock, we look at the reasons why we pick the stocks. And if those reasons are intact even today, there is nothing for anyone to be, at least we, even in our own money that we manage, we follow the same principles. So that's the overall data point, and we expect this to be a 2025 story of 5 trillion. The conclusion points is a summation of everything that we spoke about: how digital India, how skill India, how manufacturing, how different sectors, how the structural reforms, how the different headwinds, all of that are going to contribute to a raring future of India is what we have projected overall. And that tells us to the fact that when you look at the research and ranking philosophy, even when you subscribe, if anybody says that we are here for transactionary relationship, okay, such a member is generally not onboarded. The reason is because the tool will not help you. This is on the concept of long-term wealth creation, which can technically happen. So the mindset is like a private equity. If you're a private equity, what do? You invest in something, you wait for a minimum of 7 years. If you can exit before that, different. But generally, the general wait time in a private equity space is you generally sit tight for 7 years. So we, in that sense, believe that if you take an approach of long-term growth story of the country, the landscape of our wonderful India, there is a lot to be done. Will we do it? Is a matter of debate, is a matter of speculation, is a matter of confidence, a matter of effort. And I believe that even if you look at the new generation, all of them are working harder. They're more aspirational. And we believe those aspirations can be, in that sense, monetized to make a bigger India, a greater India, and a wonderful India. And we hope in the process, all of us, most of us, some of us in this room, become a part of that. Kuch hite hum pe bhi gire. We also become multimillionaires in the process. We also contribute to the social and the economic development of the country. And in the process, create a wonderful India. Yeah. So that's for it today. Happy to take questions, if any. Happy to take it off the line. Happy to take it online. Happy to share the presentation. Sanjeev?
So just to, obviously, as I could feel that people are keen to know more about what is GDP, what is real GDP, what is nominal GDP, how it is calculated, etc. And as all of us know, there was debate some time back when they had changed the formula, or government had changed the formula, that why is it this way? How can it improve so much from 5.5% to about 7.5%? So a little bit, honestly, I would like to share my understanding, and we can probably do some more work on it since people are keen to know more about it. GDP is basically C plus I plus G plus X minus M. So C stands for consumption, I for investments, G for government spending, X for export, and M for import. So consumption plus investments plus government investing or government investments plus export minus import. So this is the formula for GDP. Now, what government did some time back, all of these you can either calculate at factor price or at market price. So earlier, to calculate GDP, all of this used to be calculated at factor price or the actual price probably. I don't know probably what is the right definition of factor price, but yeah, it's the actual price. Now government changed the formula and they started calculating everything at market price. Plus the base year was changed from 2004-05 to 2011-12. Plus manufacturing got probably a larger participation. So these 3-4 things happened as per government explanation. These changes were done to bring it in line with international standards. So this is how international agencies and GDP numbers are calculated globally. But yeah, there were debate and some people would agree with it, some people wouldn't agree with it. GDP in real terms and GDP in nominal terms, the difference is real term GDP is adjusted for inflation. So GDP in nominal term is the number everyone looks at, everyone talks about, because that's how it is looked at, GDP in nominal terms, without adjusting to inflation. But yes, there are various ways to look at it, and there are different reasons why probably economists look at it differently. But the most widely used method is GDP in nominal terms, which is currently at about 2.5 trillion, I mean FY18 data. Which is expected to grow to 5 trillion over next 7-8 years. So we'll do some more work on it. We'll probably figure out how it can be communicated in an easier manner so that all of us, including you, can understand it better and little bit more in common man language. We'll do that work, and probably you will have something from us in next 10 to 15 days on your email. Thank you.
Jeetendra, you're being very modest in saying you're not an expert. But if an average person like me can understand that we are at the sweet spot, we're looking at an economy which is going to be growing at a growth rate of 7.6% through 2015 till 2025. The consumption story of the middle class, looking at digitization reaching 55%, and you said e-tailing looking at about 8 to 10%. With the embracement of what India is now, from a global integration standpoint, I believe there is a new identity that every Indian citizen is receiving elsewhere. And truly, one of the sentences which I take from his presentation is, markets value what the future holds. What the future holds for India is truly very, very promising. Thank you for that.